to all employers, provisions available for larger employers, and then we'll move to small business, self-employed, independent contractors, and nonprofits, and that's where we're going to spend the bulk of our time. So we'll start for the provisions for all employers. The first is a payroll tax provision for employers who pay payroll. So if you think about it like this, everyone is writing a check to their employees. After you write that check, you normally write another check to the federal government covering payroll taxes for both the employee and the employer side. So under this bill, an employer may choose to delay their payment of the portion of the payroll tax, which is 6.2% of Social Security wages. They can delay that between now and January 1st, 2021. And if you choose to delay that, you have to pay 50% of the accumulated amounts that would have been owed by December 31st, 2021, and the remaining 50% on December 31st, 2022. Now, there's an important caveat here. So this is generally available to all employers, except if you've had a loan forgiven under the Paycheck Protection Program, which is a small business loan program that we'll talk about a little bit later. Other tax changes that are important: net operating loss. If you have a business whose net operating loss and you want to be able to use that against prior taxes paid. So now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. And this also applies to pass-throughs and sole proprietors. If you're a business, and this is primarily for corporations, you have AMT credits, you can accelerate the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who maybe in the past couple of years you made investments in your property, you can accelerate the recovery of that. Now, all of these provisions are really centered on one idea, which is improving liquidity for employers. And at the moment when employers have perhaps reduced revenue or maybe no revenue coming in, it's really hard to pay the bills. And so all of these provisions give employers greater access to liquidity. Now, as we go through this bill, it's important to think about what the lawmakers had in mind, what the goal is. As regulations come out, we're going to see the various agencies involved kind of give their guidance, and they're really looking to what was the intent here in Congress and how do we roll that out in an efficient way. Something to keep in mind as we go through all this, as I know things are changing day to day. So on these provisions here, it's not really as much about reducing overall taxes as it is about timing, right? Giving the employers more access to the cash they have today to be able to pay their employees. All right, so another provision that's available to all employers is the employee retention credit. Now, this is one that was a late addition to the bill. It was not in the early draft, so this one maybe hasn't received as much attention, but the retention credit generally applies to employers. We're talking about businesses, but also nonprofits, for example, who were fully or partially shut down as a result of the coronavirus, or have seen a drop of 50% or greater in their gross receipts in a quarter, and they're eligible for this until their gross receipts get back up to 80% of their prior year's amounts. So if you think about this, this really is designed to help employers who've shut down or lost revenue, but who continue to pay employees. Now, how much is this tax credit worth? It's 50% of the wages paid by the employer up to $10,000 per employee, and that's a fully refundable tax credit. So think about this as a $5,000 tax credit available to the employer. And there are special rules for employers with more than 100 employees and employers with less than 100 employees. If you have more than 100 employees, the benefit only applies to employees who you are paying but are not providing services. So think about it this way. Your business is shut down, you've had a drop in revenue, your employee is not working and they're not teleworking, but you continue to pay them, you can access this credit as a benefit in recognition of the fact that you've paid them. Now, if you have 100 or less employees, the requirement that they not be providing services does not apply. So it's available to all employees you pay during that eligible period. And remember, that eligible period is when you're shut down or when you have a quarter with that drop of gross receipts relative to the prior year. So importantly, again, here, same as the last provision, the Paycheck Protection Program, the small business loan program that we'll talk about. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. And, we understand that employers may have cash flow problems. And one of the things employers who take advantage of this, we expect that Treasury is going to come out with some guidance here providing employers to get in advance on the payment of the credit. which will of course help them to pay employees today. All right, so let's talk about mid-sized and larger employers. The bill includes a total of $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. These Federal Reserve credit facilities, they're things the Reserve's creating to support commercial paper, money market funds, and they do this in regular course of business when we have a financial crisis. They were used in 2008, for example. Now, $454 billion of that 500 is directly for businesses at large. There are special programs in here for the airline industry and critical national security businesses, and that makes up the remainder of the 454 to 500. We expect to see here in the coming days that the Federal Reserve will issue more guidance about these credits when they launch them, and it's going to include some terms and conditions. And if I will, I'll pause here. I'm hearing a little bit of background noise, so if you can please make sure that you are muted, that would be much appreciated. So the situation is going to be we're going to have some terms and conditions attached to these. So if the company goes, if you're looking to access this, there's going to be some restrictions like executive pay, as well as some restrictions on stock buybacks. And this isn't something that where a business is going to go directly to the federal government. What the Reserve is doing is lending or giving to lending institutions to then make loans available to businesses. So moving along here, we're gonna dive into small businesses, the self-employed, independent contractors, and nonprofits, and this is where we're going to spend the bulk of our time. And really, the provision that's getting the most attention here, and I know there've been updates daily. This was started to roll out last Friday, but it's called the Paycheck Protection Program. We'll do a quick overview. So what it is, it's $349 billion in loans for small businesses, generally defined as businesses with less than 500 employees, 501c3s, self-employed and sole proprietors, as well as independent contractors. So a way of thinking about this program, if your business is generally qualified for an SBA program, you're going to qualify under this one. And then in addition to that, so some employers, some businesses who would not qualify otherwise have been added to the list. So this includes, for example, the independent contractors and self-employed. This also includes restaurants and hotels where they would otherwise be ineligible, because if you add up all their locations, they would have more than 500 employees. Under this bill, it says we're going to judge you if you're in the accommodation of the food services business as a per location basis. So don't automatically assume, if you're not eligible for regular SBA programs, that you're not eligible for the Paycheck Protection Program. How much can you borrow? You can borrow up to 2.5 months of your average payroll expenses, and there's a formula to calculate average monthly payroll. And once that's calculated, multiply by 2.5, except your loan cannot exceed $10 million. And where do you get this loan? So a lot of folks are asking if they go directly to the SBA. The SBA does have an application, but rather than going directly through the SBA as you would through other loans, you're going to be going to your local or national lender. So a good place to start is with who you bank with now to see if they're participating. If a lender is involved with the SBA 7A program, they're automatically included as a lender here. But really the Treasury is quickly designating several more lenders, and hopefully someone that you currently bank with, so that to make this easier on small businesses and to be able to roll this out quickly. There are very minimal requirements here as far as underwriting the loans. So there's no collateral required, no personal guarantee is required, and really a unique feature of the loan is that this loan can convert into a grant based off of what the borrower spends money on. So really the way the bill is laid out here, it looks at the 8 weeks of your expenses after the date of the origination of the loan. And you get to tally up everything that you spent on payroll, that you spent on rent for the business, that you spend on interest on mortgages that are tied to the business, and what you spent on utilities, and you can get dollar for dollar forgiveness of your loan up to that amount. And of course, your loan the forgiveness can't exceed the amount that you took. Now we've seen guidance that's come out from Treasury and the SBA that says 25% of that loan forgiveness, so 25% of what you're spending that loan on, if you're maxed out there in terms of the rent, the mortgage, interest, and the utilities, really this is targeted toward the payroll. So 75% must be spent on your payroll expenses in order for that to be forgiven. So there are some conditions. Your loan forgiveness is reduced proportionally if you reduce the number of employees that you have relative to a benchmark period. And the loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. And that's a good point on the wages above $100,000. So in your calculation of payroll expenses, you get to count the first $100,000 that you paid an employee, but nothing beyond that. So this is really targeted to middle income earners. So there's another caveat here. So if employers, if let's say you're looking at a potential reduction in that loan forgiveness, you can avoid that reduction. You know, I understand a lot of employers have already had to lay off employees or perhaps reduce wages. We can avoid that reduction if you bring back employees and restore their wages. This is generally within 30 days of the bill passing, and that you maintain those employees and maintain those wages through June 30th. So you think about it this way, what the government really is incentivizing, the goal here is to get money to small businesses to continue paying their employees. So we often get asked, you know, what if the business is shut down? So perhaps, you know, in Ohio, you have some orders shutting down non-essential businesses, you know, stay-at-home orders. What if the business is shut down, or you know, you're in one of these states? So it doesn't matter really for the purpose of this program. What the loan looks at is, after taking the loan, were you paying your employees? And remember, the goal of lawmakers here is creating the program was to provide assistance, you know, essentially in the form of grants to small businesses, and to encourage those small businesses to keep paying their employees. Now, I mentioned briefly earlier, this loan rolled out last Friday on April 3rd. You may have read about it. There were some hiccups with lending. I mean, this is a very large program, part of a very large package, and the government's doing everything they can to roll this out quickly. And we really, I mean, haven't seen anything like this. And I know everyone's working it with lenders, working with the borrowers to try to get access to these funds. I think last I read that they've already gone through and issued or committed about 10% of that $349 billion. You do want to get in line here soon. I've heard some concerns about potentially, you know, the program is capped, running out of funds, you know, eventually. Now, there are conversations ongoing about how we might be able to shore up the account should it be used up to the fully capped amount. And so that's something that we're keeping an eye on. I saw a little notification pop up that the government's looking for another $200 billion. And there's ways that, if you go back to kind of what the Federal Reserve is doing, there's potential there for some lending that could add additional funds into this program. But certainly a little bit of a sense of urgency here getting your application in with your lender. So here's a guide the U.S. Chamber produced. Hopefully it's been circulated already, and I know I'll make it available. We have some updates as we get more guidance from Treasury. Go ahead and these slides will be available as well, but go ahead and take down that web address. You can access this guide, and really what we're doing, it goes through detail for employers, like who is eligible, how can you calculate your average monthly payroll cost, you know, what the lender might be looking for when you apply for the loan, and how the forgiveness would be calculated. What we're trying to do is we're encouraging small businesses to really understand whether they're eligible for the program, and think about what the loan forgiveness might look like in their situation on the back end as you make this decision whether or not to apply for one of these loans or grants. So moving on to another provision here for small businesses, self-employed, independent contractors, and nonprofits. This is the SBA Economic Injury Disaster Loan, also known as the EIDL loan. And they have been around for quite some time. So I know if perhaps you were, you know, affected by a natural disaster, I know perhaps if your business was affected by tornadoes just last year, for example, you might have applied for or received one of these EIDL loans. Now, in terms of who's eligible, small businesses and nonprofits, and this includes faith-based, so there's no restrictions here on the types of nonprofit, but it's any entity that is a nonprofit that has fewer than 500 employees, and again here, sole proprietors and independent contractors. Now, this is an actual loan, so you know, it's not a loan that in general will convert into a grant. You can borrow up to $2 million in working capital that's repaid over 30 years, and you see the interest rates there. So 3.75% for businesses, 2.75% for nonprofits. If you take out this loan, payments are deferred for up to a year, so you don't have to immediately start paying on this loan. Now, they made it easier for individuals and businesses to apply through the CARES Act. So your loan is going to be based on your credit scores, and you don't have to immediately produce your tax returns. You can get up to $200,000 without a personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's some general security interest, or sometimes what is secured with real estate, but really they're trying to move away from real estate in this particular instance. Now, an important feature that's really brand new as a result of the CARES Act, if you're applying for one of these EIDL loans, you can request that you be provided an emergency grant, which the government must provide within 3 days, and that's up to $10,000. The bill details what you may use the grant for, but really there's no requirement. It's a $10,000 grant that does not have to be repaid, and that's even if you are denied the loan. So this is one we're keeping our eye on too, because I'm hearing early reports that it's being rolled out in different ways. Perhaps, they said it's up to $10,000. My understanding earlier was that it would be a $10,000 grant, but I'm hearing that there may be some conditions or a formula in place where it could be based on number of employees. For smaller businesses, I've heard one report of $1,000 per employee. Something we're keeping our eye on, and certainly we'll keep you updated on what information we're hearing on that. But just know that this is an emergency grant. You apply for it as part of your application or you request it as part of your application for the EIDL loan, and it must be issued just within 3 days. If you are denied the loan, you still have access to the grant. So there's some important interactions here with the Paycheck Protection Program that we just talked about. So, for example, if you end up with both, and generally we would end up with both because you've already received the EIDL loan, and maybe now the paycheck protection laws are being set up and you're applying for those, you can roll those together. But one thing to remember is you can't get double forgiveness on the $10,000 that would come off of the Paycheck Protection Program's forgiveness. There's also some requirements with respect to the paycheck protection loans that you can't double dip. In other words, you can't take out 2 loans to pay the same bills. So if you're thinking about both of these loans, you're going to want to think through those restrictions. So you don't want to just assume you can do all of these programs and just stack them up. What they've done is make the Paycheck Protection Program probably the most favorable, then tacked on these other programs that don't avail themselves of the paycheck protection loan, and that includes this EIDL loan. So you don't apply for this by going to your local bank. You apply for this one directly through the SBA at their website at sba.gov. And this is one where chambers and other 501c3s are eligible to apply. Chambers can also receive the employee retention credit, but they have to be substantially shut down and the reduction in revenue prior to that period. I know there's some questions on what various nonprofits are eligible for. All right, so quickly, we're kind of closing in here to the end of the presentation. Now, with respect to small businesses, there are some provisions we've received a lot of questions about that they're not from the CARES Act. They come from the Families First Act, which was the prior bill, so phase 2 is generally what it was referred to as. So in the phase 2 bill, what was included, there's a requirement that employers with less than 500 employees provide paid sick leave, so 10 days of paid sick leave to their employees, and that's if it's related to the coronavirus. So sick leave is taken when you're ill, when you're quarantined, or you need to take care of a family member who is quarantined, or if you're taking care of a child because the school or daycare is closed. This leave is paid at the regular rate, but it's for a maximum of $511 per day, unless you're taking care of a family member, and then it's at 2/3 the regular rate with a maximum of $200 per day. So importantly, the federal government here will reimburse 100% of the cost up to the daily maximum that you pay your employees. This is a refundable tax credit. So understanding that businesses often have, liquidity problems at this moment. So Treasury is taking steps to allow businesses to request, again, an advance on the refundable credit. So you have the resources to pay employees who are taking this sick leave today. So this is in addition to what the employer already provides, including what you provide pursuant to state or local law. And there's a lot of talk about businesses with fewer than 50 employees being exempt. The law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's, with respect to leave that's tied to caring for a child whose school or daycare is closed as a result of the coronavirus. Also, there's another provision or another condition there that you can only be exempt to the extent that if providing that leave threatens the viability of the business. So if you think this applies to you, I mean, this is one where you want to go to the Department of Labor's guidelines and check what they're posting on their website. They explain this further. And we also have a guide that we just created to walk through some of these paid leave provisions. So finally, paid sick leave is generally not available for an employee where they can telework. Another thing to keep in mind there. So this bill also includes paid family leave, or FMLA. For those not familiar, this is the Family Medical Leave Act. It's a law that generally allows for 12 weeks of unpaid leave. And what the Phase 2 bill did was say that employers with less than 500 employees, so they are required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school or daycare closure caused by the coronavirus. That's the only reason for the extended leave that was included in the bill. And when you think about the interaction between this and the sick leave, an employee would take 10 days of sick leave first, and then would be eligible for up to 10 weeks of paid leave. Here, the leave is paid at 2/3 of the regular rate, and again, a maximum of $200 per day and $10,000 in the aggregate. And it's in addition to what you provide under state and local law. And again, it's fully reimbursed in the same way by the federal government, and there are similar exemptions for employers with fewer than 50 employees, same as the paid sick leave, and it does not apply to an employee who can telework. So here, if you are looking for more information, like I said, this stuff's being updated on a almost hourly basis. Please visit our website at uschamber.com. And for the small businesses here on the line, please check out our website, uschamber.com/co. Co is a website we have. It's a great resource for small businesses. It has survival guides, great tips, when we're in regular times, but we've really been adding a lot of great material for specific to small businesses in terms of resources that are available and really easy to understand guides and how to navigate all of the resources that are out there from the federal government. Again, it's uschamber.com/co. And with that, I'm going to go ahead and turn it back over to Jessica so we can start answering some of the questions you might have.
Great, thanks, Kevin. And I see some folks have already utilized the chat box, which is great. I want to point out, as far as some of the programs using the preferred lenders list, the Dayton Area Chamber of Commerce does have a list of preferred lenders in the Dayton region on our website on the coronavirus guide for businesses. So check that out. You don't have to be a member to utilize that list. We have that there for you. So just want to point that out, as well as some of the resources that the U.S. Chamber has provided. We've also posted that. They're great. So make sure you check that out. And Kevin, when I read these questions, you might want to click on the little chat box bubble, just because some of them are a little bit longer. And so it might be easier for you to sort of read along with me. So the first question we have kind of came up early in the presentation. So you may have mention this later, but if you just kind of want to reemphasize, is the additional federal unemployment available for reduced hours or intermittent furlough?
So it is. This is it's pretty generous when you think about kind of how it was designed and how quickly it went through. So it's a flat $600 that's available for, in addition to state unemployment, and it is available for reduced hours and also furloughed employees. So distinction here doesn't matter. Those employees would still be eligible for that federal add-on of $600. An important provision I did mention, but something to keep in mind because it was such a big sticking point in this debate, is this is going to be, I know states have done quite a bit of work to figure out what is, the appropriate calculation in terms of setting up their unemployment insurance and their unemployment programs. And in this case, so like I said, it's a flat amount that's in addition to what the state is already doing. And this is, a lot of people were worried, especially employers, that this may keep employees from coming back. Remember that the employee, their individual, would lose eligibility if the employer is back in business, asking the employee to come back to work. The employee can come back to work and they choose not to, then they're no longer eligible for this additional add-on.
Okay, thank you, Kevin. Next one on the PPP, the last bullet point. Someone here, Kelly here says, that's the first I've seen to restore within 30 days of loan passing and maintain until June 30th. All Kelly's seen so far is just restore by June 30th. Can you provide some clarification on that?
Sure. So the bill, the language in the bill has, it's basically said that you have to restore. So if we're looking at February 15th, which is kind of like the start date of a lot of the different programs here. So what your employment was on February 15th, if you, after that point, had already laid off an employee, what they're looking to do, they give you 30 days after the loan passed. And so it's April 20, I want to say 6, but you have to count 30 days out from when the bill was passed a couple Fridays ago. You have up till that date to bring those employees back. And really what that does is it recognizes the fact that employers already had to make some tough decisions in letting employees go. But there is this grace period here where you can rehire those employees. And remember, they don't have to be working. You can be shut down, but you bring them back on the payroll, and you keep them on the payroll through June 30th. And that is, and then you can reduce you can avoid the reduction in the loan forgiveness if you go ahead and bring those employees back. Now, remember, it doesn't matter if they're working or not, but the idea is if you continue paying them with these loan funds, then that amount will be forgiven. There's also the interaction there with if you had any reduction in wages, just make sure that it wasn't greater than 25%, because then you'll be looking at a reduction in the loan forgiveness as well.
Okay, I think that our most recent question in the chat box from Clara about the within 30 days of bill passing, that would mean they would need to restore by April 27th. So I think you just answered that as well there.
Yeah, thanks for the assist on that one.
Another question from Kelly. Again, this is a little bit longer one, so if you want to have the chat box pulled up. If the Treasury guidance on PPP changes, such as clarifying that you can include payroll taxes in your loan amount, and you have already submitted your application and or your loan has been funded, can you update the loan amounts to match the new rules?
That's a good question, and I think what that question speaks to is a good recognition that this is changing. Like I said, on an hourly basis, because we're kind of building this plan as it takes off. And that's one where we're going to have to keep an eye on future guidance. So what the U.S. Chamber is doing, we're working with the SBA because we're hitting a lot of maybe some of these road bumps where it's all things that we're trying to consider here kind of on the fly. And what's been really helpful with doing a lot of these webinars too is getting feedback like that, where we can bring it to the SBA to think about these things in the guidance that they're issuing. So that's one where I don't know, but it's something that we're going to keep an eye on for future guidance. And it is something I recognize that's really a challenge in all of this is a lot of these specific questions, even going back to when we're talking about the dates in which you have to, bring back an employee. This is something where the SBA, we want to look at the guidance that comes out, and it may be updated. And the SBA has been great about, listening and working and rolling this program out very quickly. But listening to concerns and some of these issues that pop up because we have such detailed questions. And as you look at certain, if you look at certain situations, they're very specific instance by instance. And that's one where we're going to look at future guidance and see what the SBA comes out with in terms of helping businesses and lenders really in that case, work through this program.
Thanks for that feedback, Kevin. And all of the questions in this chat log, I get a copy of it, so I can send that over to Kevin, because it's good to know that the U.S. Chamber continues sort of this open dialogue with the SBA and other regulators to make sure that kind of all these specific questions get answered. Now we have a question from Stephen. Is the PPP available to companies with foreign ownership if all employees are U.S. citizens?
Great question. This is one I was digging into yesterday, and there isn't clear guidance where I can point to this and say this is explicitly where it's said. Now, what I can tell you is what my understanding is from conversations and from reading into what moves that the SBA has moved. And this is something we've talked to them about. For instance, there was an initial application where they were, it seemed to be where if let's say a firm has even one owner, 20% or greater ownership of the business, that's not a U.S. citizen, that entire business and all the employees were then ineligible for the PPP. And we saw a move away from that in the updated version of the application, where they would be included. I received questions about a wholly owned subsidiary here in the United States. All the employees are in the United States. My understanding is that business would be eligible. Like I said, don't have specific guidance, hope to get that. But if you look at the move from the first application to the second, it does appear that that's the move the SBA is making. Important here to remember too, if you think about the intent of the legislation, making sure that small businesses continue paying their workers here in the United States, that seems to be consistent with the intent, right? Is that that business is located here in the United States, regardless of ownership. All the employees are here in the United States. Those employees would the business would continue to pay those employees. So that is my understanding. We'll hopefully get some clearer guidelines on it. And for a question like that, I would recommend to apply. So get in the line, start working through that. Different lenders, look, we're all working through this as quickly as possible, including lenders. And I know that they're looking at that piece as well, and trying to figure that out. So it's something you may have to work through with the lender as well, but you want to apply because it's one of those that we're just going to need a little bit clearer guidance. But my understanding is that's the direction SBA is moving.
Okay, thank you. Question from Roger. When is guidance expected for the mid-size company programs, and is that likely to be administered through the banks?
Sure. So I don't know if we can get a quick update on the programs. So maybe we're talking about here the tax provisions. So the employee retention tax credit and the deferred payment on payroll taxes. Good question on timing, and I haven't seen it. That doesn't mean it's not out yet. There are a lot of things, obviously, that we've been digging into. So I don't have a firm answer for you on that one. And please update, let me know if that's not what you're asking about in terms of the tax guidance. But for the employee retention tax credit and the deferred payment in terms of all of the workings of that, and when we talk about some of those refundable tax credits as well, I haven't seen the guidance. Doesn't mean it's not out, but it's something that, Jessica, if I can, I'd like to look at this once we wrap up and see if I can get that to whoever asked the question.
Sure, absolutely. And then Roger did clarify, he's not talking about the tax provision, but the mid-size business programs. But again, afterwards, I will send this log to you and kind of maybe do a deeper dive for that question.
Sure.
Can you use EIDL to pay the payroll cost, like compensation greater than $100,000 that cannot be forgiven from the PPP loan?
Good question. So we're talking a little bit about the interactions here, and I think a good baseline, 2 general rules to guide you is that you can't borrow for the same expense twice. And then you can't claim as an expense something that was paid by the federal government. So that's where you get some of the interactions with the tax credits there too. But using those 2 rules as a guideline, my understanding is that yes, since the PPP wouldn't cover that amount above $100,000, that if you were looking to compensate an employee who makes above $100,000 a year, that the EIDL loan wouldn't be for the same expense, because it doesn't go above $100,000. So my understanding is that would be that you can take out funds for that type of payment. Again, it's something we're going to want to work through with, looking at the SBA guidance, but it does seem, following those general, those 2 rules, that you can make, your payroll taxes and the wages above $100,000 with using the EIDL loan.
Okay, so another question from Stephen. If they're using February as the base head count, but are using your 2019 941 payroll to determine loan amount, how do you deal with an increase in head count between December 31st, 2019, and then February 15th of this year?
Okay, so I'm going to ask you to repeat that question.
Sure.
One more time.
So if they're using, and I'm assuming federal government here, February as the base head count, but are using your 2019 941 payroll to determine loan amount, how do you deal with an increase in head count between December 31st, 2019, and then February 15th of this year?
Sure. So the question is dealing with, like, so you have a difference in terms of what that benchmark period is for both payroll and for the employee count. So this is where I'm going to plug our guide that I put up on the screen there. So this one here. These type of questions is where I go to the guide and kind of look at a lot of the details that we have there in terms of what's included in the payroll cost, excluded, et cetera. So my understanding is that when we're looking at for the average monthly payroll, right? So if you've been in business and you have a tax filing from last year, we're going to look at the average monthly payroll from 2019. Right? We're going to take that amount. So depending on the fluctuation, and if you were hiring at the end of the year, some of that may be captured. I should also say that if you're a seasonal business, there's a different kind of period that they're going to use at the beginning of this year. But if you have, in terms of what they're looking at for the head count, right? You're going to have, there's a few different options. One of them being your average number of employees per month from February 15th to June 30th of 2019. So this is a look back period. If we're using last year's payroll, average monthly payroll, and then we're looking at the average FTEs from February 15th, 2019 to June 30th, 2019. I don't know if that's going to help you. It sounds like there was some hiring toward the end of the year, but I mean, that's the guidance that's out there. And this is something which also may be updated with SBA guidance, because I have been receiving quite a few questions about this, businesses that staffed up at the end of last year, businesses, perhaps at the beginning of this year, some businesses that just started at the beginning of this year, in which case they would take average monthly payroll from January and February. So these specific instances will hopefully be addressed in the SBA guidance.
Okay, and then Colleen is asking, will we be guaranteed to be notified of loan approval or receipt of funds before April 27th so that we can make decisions to bring people back under the forgiveness assumption?
You're right. So again, this is, right now we have a little bit of room, right? So if it's before April 27th, I haven't seen that this specific provision addressed in the interim final rule from the SBA, perhaps because they were looking at getting this program, up and running, and they had a little bit of time. So there is no guarantee in terms of timing on the Paycheck Protection Program. All right, so they've already committed with 1/10 of the program, multiple billions of dollars for here. So it is kind of rolling out quickly. I think right now what I would recommend is getting the application in, hopefully a quick turnaround. So a little bit more on this, what I've seen with a lot of the national lenders is that they are prioritizing current clients. And what this has to do with is a requirement that they know their client and some of the anti-money laundering laws that are out there. So we've seen current clients prioritized. But there are additional lenders being added as well. So do get in line. There is no guarantee in terms of timing on the turnaround, but we have some time right now for the application to get in. Hopefully, you get a decision that's made, and then you make those decisions in terms of hiring. What we do want to keep an eye on is what the SBA has to say on the loan forgiveness, going into more detail, especially as it comes to as it comes to those dates. So I told you what it said in the bill, and that's, the best thing I can base it off right now. However, there are certain instances where SBA is kind of interpreting the bill to make this a little bit easier to administer. So it is something you're going to want to look at future guidance, especially when it comes to that loan forgiveness. But no guarantee in terms of turnaround time on this loan.
I'm going to jump ahead to a question that just came in from Jonathan. We know in Ohio, Governor DeWine has asked the cabinet to look at their budgets and make some cuts. And there's obviously concern that that has a trickle-down effect to our local governments. So Jonathan is asking sort of broadly, where do local governments land in all of this? And have you been part of any sort of discussions in that arena?
A very good question, Jonathan. And a lot of what we're going through here. So at the chamber, we've been really focused on these business provisions, and it's a lot. So I can't say that we've really dug into the local government effects. Now, I was on a call with a group of county commissioners in one of the 6 states, and talking about some of these provisions. What I do know is that the CARES Act had $150 billion dedicated to state and local governments for dealing with coronavirus, unforeseen circumstances. So a little bit of help, pretty significant amount of help there. A lot of these provisions are specific to businesses and programs to help the business community, the ones that we were walking through. And I'm trying to think through some of so you have $150 billion there, and I'm not as familiar with how that's going to, how that is distributed, but it is in the CARES Act. And then also some of the employment provisions, and I'd have to take a closer look and whether or not this is applying to public employees or not. But most of what we're working through, honestly, are these business provisions. Spending a lot of time kind of getting through those right now. Sorry, I don't have a better answer. Just know that there is that $150 billion kind of carve out for state and local governments in the bill. And, hopefully that provides some help there. And
then Claire has a question, kind of doing a little bit of a math game here. So while generous, the $600 additional funds to EEs on unemployment insurance could create issues and adjustments that are being made with rules. Is there any chance that could change? For some EEs, it could be better to just remain on unemployment insurance.
You're asking, this is Claire, you're asking the right question. So this is, that may be the case for some employees. And like I said, this bill passed quickly. They had to put this together and respond to the pandemic, in a massive way with a $2.2 trillion bill and do this very quickly. That provision, and I heard some of the senators who were leading it say, we had to look at, there are 50 different state unemployment setups. And we, rather than going through kind of each one and where was it going to fall, they're like, the quickest thing they could do is this additional $600 add-on to make sure that they were providing the benefits that are needed. And I think what your question is getting to is, let's say an employer is, taking advantage or accessing one of these programs to pay their employees, but they may be, with that additional federal, the $600, they may be earning more on unemployment. That's something that maybe wasn't considered, or maybe it was just seen as, okay, we have to get this rolled out. But it's the right question. And I think what I can tell you is that, it's a conversation that it's something to consider and for an employer or, employees to think about and kind of work through there. That is, you're asking the right questions.
So Kevin, that wraps up the questions we have so far, but I'll give a couple minutes since we still have a couple minutes. If you have an additional question you want to put in the chat box, go ahead. I just want to remind you to keep the information that's up on Kevin's screen handy, bookmark it. Also bookmark your either Troy Area Chamber of Commerce or Dayton Area Chamber of Commerce web pages. We follow a lot of what the U.S. Chamber puts out, and we are updating our website on a daily basis, sometimes multiple times a day, between our marketing communications department in conjunction with our public policy and economic development team. Real quickly, Colleen had a clarification or question on the last question from Clara. Don't they get the $600 if the employer asks them back and they decline? Correct.
Right. So if the employer does ask them back, that's right. I have gotten questions where the employer, looking out for, thinking of their employee, thinking, well, if I ask them back, I would be paying them less in some, instances. And that's, I think, where we get into that issue. But you're right that if the employer is saying, all right, back up and running, we need you back at work, then that individual benefit, the additional federal benefit, that an individual is no longer eligible. Does that make sense? So I think what I was talking through wasn't necessarily an instance where the employer is asking them to come back, as much as questions I've received for where people are trying to understand the interactions of these programs. But that's right, where an individual loses eligibility once the employer asks them to come back and they're able to come back. And with that, unless there's other questions too, I want to thank you all for joining. I know there are a lot of questions, and this is a lot of information, and we're all kind of going through this as quickly as possible. Continue asking those questions and providing feedback to the chamber. Can't tell you day-to-day basis all the information that I'm getting that we're able to feed back to the federal government to help work through these programs. Don't have to tell you, there are difficult times. I think I'm glad that this CARES Act got through, and that we're able, we're working all together to figure this out and figure out how to kind of, either stay afloat and make sure that, again, that this is a bridge to a time where we can get back to normal commerce. So I just say, hang in there, keep the information flowing, and just know that, the Chamber of Commerce has your back, state and Troy chambers, certainly the U.S. Chamber, we're here working for you. So just be in touch and let us know how we can help you.
Thank you, Kevin. I appreciate those closing words. And just again, to echo Kevin's sentiments there, thank you for taking the time to get more information. We know it's important to you, important to your employees. And so that's why Chambers of Commerce continue to hold webinars like this. Again, I will send the chat log to Kevin so he can maybe dive into some of the more specific questions that may need a little bit more additional feedback. Again, we've recorded this webinar, and you will get an email from me explaining how to get the recording as well as the slides. So thank you again for joining us, and have a great afternoon.
Thank you.